AppFolio's CEO just sold a chunk of stock, but that headline misses the 25% of maintenance requests now handled by their AI. This isn't a red flag, it's a fundamental operational shift. This is InvestIq. While the TSX nudged down 0.08% today, with both RBC and TD showing slight gains, and crypto mostly flatlining, the real story for investors isn't in those broad strokes. It's in the quiet revolution happening under the hood of companies like AppFolio. And yes, Wendy's dipped slightly, but that's small potatoes compared to the tech plays. AppFolio, ticker AFOL, saw its CEO offload shares. Now, usually, an insider sale like that screams caution. It's the classic signal that someone with intimate knowledge is getting out. But here's the contrarian take: AppFolio's recent moves in AI are fundamentally re-rating their business model, making that insider sale noise, not signal. Their AI is now autonomously resolving a quarter of all maintenance requests. Think about that, 25% of a core operational cost just got automated. That's not marginal efficiency, that's a structural change in how they deliver service and manage overhead. This isn't about human capital leaving, it's about technological leverage taking over. For investors, focusing solely on a CEO's personal portfolio move while ignoring a 25% operational efficiency gain through AI is like watching the sprinkles fall off the ice cream cone while the whole cone is melting. The clear takeaway: in the age of AI, traditional insider sale analysis needs a significant upgrade. Operational breakthroughs can easily outweigh short-term executive portfolio adjustments. That's the InvestIq take for today. Analysis only, not financial advice.